It's just gone 10 to the top of the hour. Welcome back. You're watching Squawk Box here on CNBC Europe. As we all know, low interest rates have encouraged a wave of M&A activity over the last couple of years. But as global rates begin to rise, will the deal-making continue? IntraLinks' second biannual survey of M&A professionals found that the majority of them are optimistic about the next 12 months, with respondents saying the UK will be the centre, interestingly enough, of merger activity. To tell us more about the findings now, we're joined by Rob Fisher, European Managing Director at IntraLinks. It's a great pleasure to have you in the studio this morning. The overall sense is very positive, I take, judging by the headlines that you put out this morning. Absolutely. And the IntraLinks monitor that we just ran, the second one we've done this year, was extremely positive. As you said earlier, 93% of the respondents were very bullish. And it was really kind of around three main areas that were showing real positive response. The depth of the positiveness, or the bullishness really, was quite intense in terms of the from corporates to hedge funds, and as well as all sectors. But interestingly enough, the sectors that were certainly most strong for the M&A outlook was the financial services as well as the energy. Although in Germany, it was real estate. And then the geographical diversity, whether it be all the major financial centers in the UK, Paris, Italy, and Germany, certainly were clearly strong about the outlook for the next year. Clearly very optimistic, and you can understand the reasons for that. Are they concerned that the credit environment is, though, tightening, and this may have some impact? Sure, good question. The response to the question we asked was just that, was what was probably the number one concern as a deal breaker, and the bursting of the loan bubble definitely came back as number one. However, at IntraLinks, we actually have an interesting position where we service both the debt and equity capital markets community, and what we're seeing from our clients is actually a very strong pull on the loan side. We don't see any pullback in the near future there. When we look at what is happening with the various funds, and private equity clearly has been very important over the last 24 months. Mm-hmm. US funds, Blackstone, all of these guys have been reasonably strong in Europe. They've certainly been leading the charge with some of these big deals that have been done. The report makes reference to the fact that you feel that the next 12 months may see them struggle a little bit in Europe. What's the background to that? Well, you're absolutely right on the detail. I mean, the private equity firms have been driving roughly a third of the M&A activity. But what we're seeing is that the responses have told us in the survey that the predominance of the M&A activity is going to be in international cross-border activities. So there's going to be a lot of competition, and as we saw, interestingly enough, the hedge funds are going to be playing even more strongly as well. In the UK, as a matter of fact, 70% of the respondents were saying that hedge funds were a positive influence on the M&A market. So I think with certainly Asia Pacific as well as Middle Eastern interests coming in, there's going to be quite a lot of competition for the business. It's interesting you mentioned Asia, because a lot of people are waiting for a big wave of Asian buying coming in, picking up brands and assets, infrastructure assets here in Europe. Is that something that the next 12 months is going to start to really see beginning to gain traction? That is the feedback we see from the survey, both Asia as well as Middle East. Rob, it's been great to talk with you this morning. Thank you very much indeed. Rob Fisher, European Managing Director at IntraLinks.